Utilities plummeted nearly 5% this week, hitting a bearish trend. With the RSI at 36, interest rates loom large. This is what every serious investor needs to know about utilities right now. Stay with me. Welcome back, or welcome if you are new to Financial Market Oracle. This week, the overall market context is one of elevated uncertainty, with the VIX index at 26.8, reflecting investors' concerns and risk aversion. In this environment, the utilities sector is worth examining, given its traditional role as a defensive play. So far this week, the utilities sector is underperforming the S&P 500, and the sector ETF, XLU, has declined by 4.92%. Despite this weakness, the utilities sector deserves attention right now, as it has historically provided a safe haven during periods of market turmoil. With its relatively stable cash flows and dividend yields, utilities can offer a compelling alternative to more volatile sectors. It is essential to remember that this is educational content and not financial advice, so it is crucial to do your own research and consider your own risk tolerance. Let us start with the technical picture and what the charts are telling us. The utilities sector, as represented by the XLU ETF, has experienced a notable decline over the past week, with a loss of 4.92% and a monthly change of 4.35%, indicating a clear bearish momentum. The RSI reading of 36 implies that the sector is currently in oversold territory, which could potentially set the stage for a near-term rebound or consolidation. However, the trend direction and conviction remain bearish, suggesting that the sector's downward move may still have some legs. Key support levels are likely to be tested in the coming days, while resistance levels may cap any potential bounce. It is essential to determine whether the current move is a sustainable breakout or an extended overreach, as this will significantly influence the sector's future trajectory. The technical setup worth watching this week is the potential for a consolidation phase, which could pave the way for a further decline or a rebound, depending on the sector's ability to hold support levels. The bearish signal from the RSI reading and the recent price action suggests that the sector is vulnerable to further losses, and investors should be cautious. Now let us look at the fundamental catalysts driving this sector. The utilities sector is poised to navigate a complex landscape from March 16 to March 20, 2026, with fundamental drivers influenced by general macro conditions. As we assess the macro tailwinds and headwinds, it is essential to recognize that elevated uncertainty, reflected in a VIX of 26.8, may lead to increased volatility. Key stocks such as NE, DUK, SO, D, and EXC are signaling a mixed bag in terms of sector health, with some demonstrating resilience while others face challenges. This week, earnings reports from major players will be closely watched, as they may provide insight into the sector's ability to withstand current macro pressures. Regulatory news, particularly any updates on grid infrastructure development, could also significantly impact the sector. In the longer term, the fundamental thesis for the utilities sector remains compelling, driven by the necessity of their services and the ongoing shift towards renewable energy sources. As the economy continues to evolve, utilities are likely to play a critical role in facilitating this transition. The macro data, including inflation and interest rates, will be crucial in determining the sector's performance. Given the current market regime, investors should be prepared for potential fluctuations. This week, the interplay between these factors will be key to understanding the sector's direction. Next, let us talk about the specific risks you need to manage this week. The utilities sector is facing several risks this week, including regulatory uncertainty, geopolitical tensions, and commodity price volatility. Investors need to be mindful of these risks and position their portfolios accordingly, given the current volatility environment, with the VIX at 26.8. To manage downside exposure, a disciplined framework is essential, including diversification, hedging, and regular portfolio rebalancing. Unexpected headwinds, such as extreme weather events or supply chain disruptions, could also impact the sector. In this environment, position sizing is crucial, and investors should consider scaling back their exposure to the sector. By taking a proactive approach to risk management, investors can help mitigate potential losses. A thorough understanding of the sector's dynamics and a well-thought-out strategy are key to navigating these risks. And now for the strategic outlook. Where does utilities stand heading into next week? Our strategic positioning recommendation for the utilities sector this week is neutral, due to mixed earnings and regulatory uncertainty. A key theme to track is the impact of renewable energy integration on traditional utilities. Please remember this is educational content and not financial advice. For more insights, like, subscribe to Financial Market Oracle, and comment your utilities watch list below. Until next week, stay informed, stay disciplined, and stay profitable. Cheers! This video is for educational and entertainment purposes only and does not constitute financial advice. Always do your own research before making any investment decisions. Past performance is not indicative of future results.